How are you guys doing? Welcome back. Today is lesson 17, planning reversals. Off the bat, you're probably like, where the hell is he? Well, this is actually my house. I made a studio in between filming this class and for my school and my job till here. So welcome back. It may look different. It probably sounds better. I have buttons now. Ooh, I can zoom in and out, big fella. My cat will be joining us for most lessons. He really enjoys the heat lamp. So I had a decanter full of whiskey there. He said no. So we just covered some great stuff about actual charting technical analysis. Today, hopefully in a quicker lesson than usual, I want to hit some points about planning our reversals and how to find reversal zones. It's fairly obvious with convergence because we've been talking about convergence and the fact that you find trend lines, support, you can throw in indicators eventually, which we'll get to, and then that gives you a good sense of value and a good sense of where they may be happening. But once again, I want to really cover some things in depth and show you some things that you may already know, but again, reword them for you to help us build that price structure, that trading structure, help you develop a system, these kinds of things. So firstly, what I want to teach you guys today is that there must be higher highs and higher lows. When we see those break or not happen, that's our first sign of a trend reversal. This comes coupled with the fact that you must have a definite trend line to make this work. If you're playing a horizontal channel play or descending channel play, that also works. But again, for these kinds of trend reversals, it's much easier to kind of look for a higher high, higher low. That starts to give out, it breaks, that's our first sign. The second thing we're discussing today is resistance trend lines. Now, sometimes they're not as important for some plays. For some, they very much are, like channel ups or horizontal channels. But again, we're going to discuss how to spot them, how they work, how to set price targets off them, and what's important if they do break in our expectations while charting and playing. Because soon in a new lesson, we're going to discuss all things with setting price targets. If you do not have a resistance trend line, it makes it a bit harder now, wouldn't it? The third thing to discuss with spotting and then planning reversals are supports and resistances. When those break, what do you do? Do you reset stuff? Do you make a new plan? Do you scrap everything? Do you continue having the charting on there? We'll discuss that today as well. We'll quickly discuss volume. Now, while we're in a bullish market, which we are, so in 2 years you watch this and we're in a bearish market per se, this may be flipped. But while we're ascending or going up or having a bullish market, one key thing to watch with volume is that we're going to have something called stairs up and elevators down, what I usually notice. On the way up, we'll have lower volume. A great sign of a possible trend reversal is a large red volume candle. So when we have a big red candle, what's that mean? How to plan with that and that kind of thing. Again, it's really important, not talked about, but again, we'll discuss it today for sure. Second last thing we're going to notice on some of these charts are the size of the candles and how often we have green and red ones on the uptrend. As we get higher up from the trend line which we bought into, let's say you bought in at $1 and we go up to $2, is the retracements from $2 to $150 the same size candles, or does it happen more often? Then from $150 to $250, do we have harder pullbacks from there and so on? Do we notice and can we notice more red candles, less green candles, stronger red ones, weaker green ones? Is there a way of us kind of tracking and watching strength and size of candles? Well, there are. We'll check that out today. And lastly is retracement strength. How intense are the pullbacks? How do they work with the trend line? Are they historically okay? These kinds of things. So with these 6 things, they're really historically based, they're really cerebral, you gotta think about. But overall, if you add these 6 things, you drizzle these on top of what you already do, you may see a lot more success with taking profits or with entering. Because if you can start spotting reversals before they happen, you'll have much higher success with risk management. And again, all this is based off risk management. All this is based off of great technical analysis, all these kinds of great things while I build this price structure and this trading structure. With that being said, let's get into it. So this chart is SWM. I wanted to discuss the higher highs and the higher lows. One thing I always look for, and this is a really easy one that most folks don't understand, is that on the time frame we're using. Now I use a 180-day 4-hour chart, but this works for day trading, scalping, long-term investments. If you're trying to find a stock that's going with the indexes, which are always going up the last 9 to 10 years, can you see obvious higher highs and higher lows? If you do not see it, I avoid that stock. Once we see on the macro time scale that we're using, the 180-day, once we see lower highs and lower lows, that's their first sign of concern that the trend may be breaking, and I'll show you. So this is SWM. Let's do this all together correctly the first time and do all the charting together like we always do. So off the bat, let's find our first resistance. This is a good resistance right here. I have a support here. I'll put it right there. Even though it doesn't touch, that's quite all right. This was a resistance. We see a support here. This matches up. Resistance becomes a support. Love it. This old resistance area right here became a support for that. Love it. This old resistance here became a support here and here. Love it. Not much here. That's okay. But right over here, this area became a resistance, became a support. Great. Resistance here became a support over here. Love it. One more time. Not much here. But up here, an obvious resistance area. I'll go with this. The top's right about here. And this is also resistance right there. So off of right here, and all this consolidation. Given the price action over here, these four down here are not that useful. But again, we can see clear and obvious and concise. So as we can see, old resistances become new supports. Let's draw these the right color. We have our resistances as orange, just for me, and our supports as white. That looks really nice. Second thing that we always add is our trend line. Let's come from down here and all the way over. We can see right here, and this is a great example and why it's a great example, we had a super nice trend line up. Foreshadowing, it doesn't break all the way, but again, interesting. Let's just take it and make it perfect, just like that. Looks really good. Looks really good right there. Let's make this a channel as always to get more moves. Just like that. Once, twice, almost three, but three, almost four, 5. So what I've done here is that I've identified our first swing, right? Our swing low to our swing high, right? Low and high. The next low here is a higher low than over here. That's a great sign, right? You love to see that kind of thing, right? So that looks really good. Higher low. Then our next swing high over here, all the way up, is higher than this swing high. Again, we've established now higher lows and higher highs. As long as we have higher lows and higher highs, I would be bullish buying into this at almost any spot that's near value. Next, we have another higher low right there. The next swing move ends around here. We'll go with right here, that's fine. An obvious higher high. One more time, higher low. Right here, higher high. Right here, higher low. Right here, higher high. Right here, higher low. One more time, higher high. Now, on this move down, you have two options. You can say higher low to a lower high, but I'll just go with saying this is one move down to a lower low. As we can see, we go from 44.69 up to now 44.06. Even though it's just some wicking, that is our first sign of a possible trend reversal. It doesn't happen for a few weeks, but again, as soon as you have a lower low, that's your first warning sign of a possible trend reversal. Let's keep seeing what happens. So now you have a lower low. All right, our next move up right here is barely a higher high. Now again, it's actually right below it. It's actually a lower high. Okay, it's a lower high by about 25 cents. But again, this is what's considered almost a double top in the industry. But again, we have an obvious but very slight lower high, right? So now we have higher low, higher high, higher high, lower low, lower high. We come back over. Luckily, we have a higher low, showing you some kind of like, okay, maybe we're okay. But then another lower high. So we can see from just seeing the first lower low, we have some problems, right? We're starting to see some shakiness. It's starting to kind of sell off. It's sputtering. It's not nearly as bullish as it was. What happens next? So we can see it comes down, a possible double bottom. It's fairly even. It comes up one more lower high to then the trend breaking. So is this a perfect example? No, but it's a really good one. So again, the lesson to this, when you see lower lows or lower highs, the first thing you should think about is this normal given where it is in the price action? Because it's possibly towards the middle of the price action. Sure, let's not get hasty. But when a defined lower low happens or a defined lower high happens, don't panic sell, don't get too worried. But the first thing you should be thinking about is a possible trend reversals happening on the macro level trend here. And again, as we can see with SWM, it happened perfectly. Let's check the next one. So this is WDAYW day. It's a really nice setup. I do like it a lot. Let's check out what happened. First of all, let's do our supports and resistances. As always, we can see that this area right here is a great pivot point, a great old resistance becoming some supports. Love it. We also have one right about here. Love it. One about here. Great. One about here, great. About there, great. There, great. Sure. So you can see down here, we're missing a bunch of moves right there. Boom, that fixes it. We have great channels, which we discussed. A lot of 100% moves here. It looks really, really nice. Now again, just for what's going on with the price action here, let's delete a few of these. That's not really needed. Let's not money up the chart any more than it has to be. Again, 4 to 6 is plenty. That looks really good. Our trend line, let's go from the bottom here and come up. Does it break anything? Sure, this breaks it just a little bit. All right, so I can go with that. Maybe come over here a little bit. Come up, see, maybe it breaks a little bit. Okay, that's fine. Breaks a little bit. So this is going to be hard to play with this wick right here. So again, we're going to just go with over here. This is totally fine. Come through just a little bit of price action and go right. Boom, a great uptrend. Looks really good. Redraws the channel, gets some extra moves. We can see it does break, and again, that needs to be part of your risk management policy. That if it does break the trend line somewhat, again, this should be a bit concerned if it does it, but again, it's a good area of value, and we can go from there. We'll discuss this later on more lessons, but again, for this lesson, it looks just fine for me. Great channels, great channel here, great supports and resistances, make our resistances orange, a lot of 100% moves. It looks really good. Once again, we can see quite a lot of higher lows, right? Higher low, higher low, higher low. Across the board, these are all considered higher lows. Now, they're not perfect, right? These are not perfect, but we have higher lows across the board, right? Higher low, 2, 3, 4. It's climbing up very, very nicely. And the same thing goes for higher highs. What happens when we get a lower low? We can see once it breaks down here, we have an issue. What was the indicator for this possibly happening? I'll give you a second to think about it. We have lower lows. What would have made you have the idea that this is possibly going to happen? I'll show you the chart one more time. Look at this price action over here, mainly over here. What would have nudged you to know a possible lower low is coming? The answer is fairly obvious. A lower high. Once again, you had a higher low, but this lower high right here, right, is about $8 less. That's your first warning sign of a trend reversal. And again, across the board here, you have a few lower highs and a few lower lows. It gets kind of choppy. It's never going to be perfect, right? But across the board, if these swing moves, right, higher low, higher high, higher high, higher low, all the way across besides this big thing, you had really nice higher lows. Once we have that, it all breaks down and it starts to go down from there. So the first thing you should always look for with your trends, you should always have a good setup that has convergence, has a great channel up, a channel size, whatever you like, good supports. As soon as you see on the macro level a defined lower low or lower high, that's your first signal of a possible trend reversal for the whole entire pattern and it all breaking down. That's the first one. The second thing we want to talk about today is resistance trend lines. Now again, a few of these plays like W-Day didn't really have any, but again, it's really imperative to talk about these as we move forward. Let's check out some plays and see how they work well with resistance trend lines. I'll show you. So this is AB. It's been one of my favorite plays this year. It's been so consistent, and this is exactly what I talk about when I say find easy plays. There's so many people who want to make this harder than it has to be. You have a 50-piece puzzle and a 5-piece puzzle. Both will net you gains. What would you rather do? 50 pieces or 5? AB is a 5-piece puzzle. It's so easy. So off the bat, let's find our supports and resistances. Let's just go with what's relevant over here. This was a previous resistance area, as we can see, became a support. Love it. This previous resistance here became a support. Love it. This previous resistance acted as a resistance and kind of as a support. Love it. We could also put a resistance maybe right about, right about there as a support area. That works just fine as well. All 4 don't need to really be on here. We'll just keep 3. That looks really good. I will put one above, up here, as a resistance. Right? This is probably just fine as a overall price target area for sure. Our trend line is gorgeous. Look at this. Come all the way over, bring it on up. All this price action hits almost perfectly, just like that. Look at this. This is the kind of plays you look for and you kind of dream of. These are perfect. Capture some extra moves, just like that. Boom. Anywhere in this channel would have netted you money 100% of the time. You love to see it. One trick that always helps me with getting price targets and helps me with noticing reversals is the resistance trend line. When you get closer to the top of the price action and you get towards the top of old resistances, a resistance trend line makes life so much easier on how you want to take profits out, plan your profit taking, all these kinds of things. So some plays will not have easy resistance trend lines, but there are some. I'll show you. So AB is an exact channel up. What we're going to do, and what you can do, is you want to duplicate your trend line and bring it up. Boom. You see how this is a mirror image of the bottom here. This is gorgeous. What you can do is that, or what I like to do sometimes is actually just draw the same exact line just like this. We'll right click and activate and bring that trend line up. Right? So we can put the trend line right here. We'll extend it right as always. Right? It looks really good. I'll make it orange as always, just like my resistance is. Make a dotted line. And here we go. With AB now, you have two options. One, you can take profit or plan your reversals based on horizontal supports and horizontal resistances. That's fine. But now you have an added layer of clarity with the resistance trend line. With this resistance trend line, the closer to it you get, the more likely you are to break it and then take profits at a much higher clip than most people. I'll show you. So this whole area, as we get close to the resistance trend line, every single time you would have had a maximum move. That's really good. What I like to do sometimes is bring it in just a little bit, like that. Boom. Look at this. So not only can you plan your reversals based off of having lower lows, higher highs, higher lows, whatever it may be, with just such clear charting with the resistance trend line, we can see as it gets closer to the top, it's more likely to reverse. Again, this is a super nice example. It's handpicked on purpose, but again, it's a real ticker that I've called 4 or 5 times on the YouTube and called in general. So when you have a great resistance trend line, you'll end up having much more clarity to plan reversals, right? It's much more consistent. Let's show you one more. So this is BLDR. It's been a fantastic play. It's recently broken down, as we can see. But just for this kind of lesson in itself, let's keep it to the topic at hand. Let's do our supports and resistances as always. So once again, we have a great resistance here, became a support. We have a great resistance area here, became a support. Resistance here became a support. Resistance here became a support. Looking really good. I'll keep all 4 on besides this one. And I'll move one up. Just do a little duplicate, activate it, move it up. Boom. That's fine for me right there. Looks great. Our trend line, once again, boom. Looks really good. I'm going to bring it just a little bit. That's okay. It's just a wick. It's just a wick. Right? I have to keep it perfect, but for sometimes it's good to also show non-perfect ones. Get some extra moves just like this. I mean, you can move it up to here if you really wanted to. That's fine. It's a bit aggressive. It is less than 5%, so I'll keep it just like that. So there's your buy-in channel looking really good right here. Looks beautiful. Oh, love to see it. So once again, to help us plan some reversals, is there a resistance trend line? These are imperative for price taking. We can draw a trend line, activate it, bring it up, and we can see it lines up fairly well. Again, it's not perfect. It's never going to be perfect. But once again, just with having this small little duplication and put on top of it, we can see some really, really good reversal action happening towards the top here. So again, it's super simple to think about, right? You'd be like, yeah, I mean, towards the top you want to take it. But again, horizontal channels, downward channels, wedges, all these kinds of things, if you can duplicate or find the same exact trend, wedge, whatever it is, a resistance trend line is the second step to helping spotting reversals. Again, higher high, higher low, breaking down a lower low, lower high. That's your first step of a macro trend change. The second, for more micro move, is to always have a resistance trend line when applicable, and when it is there, use it to your advantage. You don't want to get greedy. It's a good way to keep yourself honest and make your plans. Again, risk management wise, resistance trend lines are imperative. Next, I want to talk about what happens when supports and resistances break. Now, once again, we've discussed this before. When a support and a resistance break a major one, sometimes it's a good idea to redo all the charting. I can agree to that. But what's more important is how do you hold that and how do you play off of it. So again, we have a whole lesson about how to hold a winner and how to cut a loser. But for now, let's just check the charting on what happens when a resistance breaks and a support breaks. What you're going to notice is that when a very strong resistance breaks or a very strong support breaks, the trend often breaks. Again, we talked about this before. One more time, let's check it out. So this is AR. It's actually a really great uptrending stock, but again, just to get you the idea of supports and resistances breaking, I want to focus this 3-month area. We can see right here a very clear support, a very clear support and resistance here, a very clear support and resistance here, one right about here, and one right about here. So again, really nice price action right here. So we have a very clear resistance right here. Constantly, the last 3 months of this play has gone up, made 100% moves constantly from channel bottom to channel tops, making exactly what you want to see for a horizontal play. Once we broke this resistance area with force, what happens? A new trend forms. It keeps going, and now we have what we can see is a brand new trend. So, what's important to know about this? Again, we've discussed that at length, but again, when a strong support or a strong resistance breaks, the likelihood that a new trend's going to form is fairly high. Again, I wouldn't scrap all your old charting, but once a strong support breaks or a strong resistance breaks, the trend we're talking about, the reversals we're talking about, go out the window. It's now a new setup. You have to look for new things, look for new higher highs, look for new lower lows, look for new trend lines. It's really important. One more for you real quick. So this is CGen. We talked about it before, I believe. Who knows? But this is a really great horizontal play. Once again, support here, support here, support here, support right about there, there, and there. So again, really good channels going on back and forth, back and forth. We can see it broke down and came back. Again, it's not perfect, it does come back. But once again, CGen's action comes down and boom, it breaks this. As soon as CGen breaks this support with this kind of force, again, the trend is changed. Our whole entire idea of this stock has changed, and our reversals and playing these reversals again has now changed. So once it broke the support, what's it do? It has now formed a brand new trend. And as we can see from this, it's a really nice descending channel here, kind of making more of a descending triangle, as we can see. So if you have a strong support or a strong resistance that's evident to you and it breaks, again, you may have seen higher lows, lower lows, higher highs, lower lows, whatever it may have been to tick you off to that, or maybe you saw a reversal happen near a trend line. If a strong horizontal support or resistance breaks, the trend we're talking about also will break. 9 out of 10 times it happens very often. It does happen, and again, keep your eye out for that. Maybe make the supports, resistance that are stronger, bold, like a size 2 or 3 on the charting, to keep that in mind. Once those break, so is the trend. So next, I want to quickly talk about a kickoff or maybe like a large volume candle. What you're going to notice with bullish momentum and in bullish kind of setups is that more times than not, you're going to see a red volume candle. The red volume candle towards the top of the charting, towards the top of the resistance, towards the top of the channel or the trend, we see a large volume red candle and a bullish setup. That's usually the first signal of a trend reversal. So again, you have lower lows, lower highs, sure, on the macro scale. But for your swings up and your swings down, a large volume candle is usually going to be the Kickstarter, the match to do it, and it's going to be fairly obvious when it does happen. And again, it doesn't happen all the time. When it does, it's fairly obvious. I'll show you. So this is HZO. It's been a really nice play for a lot of people. It's recently broken the trend line, but again, that's okay. What I want to focus on is volume. So here's our equity volume down here. And again, a lot of different days. Let's put a line where a lot of large days of volume will happen. I want to focus more recently. So we can see right here on the way up, we have a nice big old red candle. Again, it's moving up just nicely, moving up just nicely. You see how low volume these two candles are? Low volume, boom, big old red candle. Just like that. What happened next? A smaller green volume followed by a large red volume candle that then changed the trend all the way down until it finally started to reverse and climb back up. Same thing happens on the next red volume candle. Coming up, big red volume candle. Came down, changed the trend completely, pushed lower high, almost a lower low it held at, and kept going. Even over here, we can see a bunch of red. And then what happens? Boom, big green. Big green then does what? Sets it up for a small push-up, and then it comes back down. Right over here, another big green, pushes it higher. That's our first jump-off candle. Over here after this push-up, we have a very clear high green one, a fake out, because then we see a very large red one. That then came down, and then to come back down. So, these are hard to spot. It's not as important, but again, it's a really nice tip to have. If you see a large red candle on a bullish setup, that's a possible sign of a reversal. If you see a large green candle towards the bottom of a trend line or on a bearish setup, another sign of reversal. I'll show you one more. This is TBPH, a really great horizontal play, and you can see obviously where we called it, did really, really well. But once again with volume, let's put a line right about here. It's probably fine. Every large volume candle, we can see this was going up. A large red volume came right there, where my line is, came there, pushed it down. Then we have another large one right here. It's a large green one right there. Large green one right here, launched it up for a nice uptrend, going up, and then it hits what? Right there. A large red one. Large red one then sets it off to come back down. Not much volume going on at all over here, kind of deciding, and then boom. The large green boy right there, sent it all the way back up. It comes back down once again. It keeps coming down. No real volume in this area, but we can see right here, a large red one right about there, sends it back down, so on and so forth. Towards the top here, we can even see the most large one is in fact a red one that sends it back down. Some charts do better than others, but again, if you want to get an advantage on reversals and charting them and training them and getting ready to see them happening, when you see a large red candle, it means it's most likely changing reversal from bullish to bearish. A large green one goes from bearish to bullish. Again, keep your eyes peeled for that. It's a great way of planning reversals when you do see them happening, and it can keep you from losing money, and again, it can help you for buying into stuff. It's a really good tip to know, for sure. Second last thing I want to discuss very briefly with you is the strength and size of candles on these retracements and on these reversals. Again, we're going from the mindset that we have bullish setups, and I want to kind of go from there. When you get close to resistance, or you go to higher highs, or towards the top near a resistance trend line, the size and strength and the amount of red candles does make a difference. And you can kind of start tracing and seeing how extensive they are, how many they are, how powerful they are, to kind of make a better judgment of how big of a pullback it's going to be. And I'll show you. So this is URA, a great setup. Once again, let's do our supports and resistances. Let's do more than usual just because I want to look at the whole entire chart. That's a great support and resistance. This resistance became a support. Again, a very obvious thing I talk about, but it's so important. This is a really good support and resistance line. This gap here filled to make a great one. This right here, was a small resistance, became another one. This right here in this area, go a little bit higher. Support and resistance. Up here, an obvious one right there, and an obvious one right here. All these are great to play off of. It's beautiful. This uptrend is also beautiful. Come all the way over. You can see it bounces off this area plenty. Love it. We have a great uptrending channel here. Again, how wide is it? About 4.5%. I keep it at less than 5, usually less than 3. But for this kind of play, it checks out great. You can also adjust this and probably bring this up maybe like this a little bit more aggressively. It's fine. What I want to notice here is our resistance trend line. Does this match up well? It doesn't, obviously. We can see there's no real, it's okay. What I do notice is a wedge happening. And so right here, once, twice, 3 times, looking really good right there. That's going to be my resistance trend line for the more recent price action that I'm going off of. And again, that's great because if we get down to value, it comes back up. I know I should be taking profits close to 23.50, probably closer to 23. And again, that looks really good. What's important about this chart is the previous price action. What I'm going to show you, I want you guys to focus on, is the amount of red candles and how intense they are for the kind of pullback you may see. That's going to be critical because if it does have a history of having a jumping off point, maybe 2 or 3 reds in a row is the issue, that's what you want to see. Let's look into it real quick. So we can see this first pullback over here. 1, 2, green, 1, 2, green. So again, we saw 2 reds, a green, 2 reds, and a green. It wasn't that intense. And over here again, we saw a few that weren't really that intense at all. Once again, nothing that intense at all. But over here, on this pullback, 1, 2, 3, 4, 5, 6, 7 reds in a row. This is a bearish engulfing. See how much bigger it is in this one? How big these are? This is much different looking than this. This was a bullish that was larger than the bearish. And then we had 3 small ones, a green, 2 small reds, and then a green, which is almost a bullish engulfing in itself. So we can see that with this kind of chart, with more red equals a harder pullback. And again, that continued for almost 2 weeks. We can see from this pullback, it goes from having higher high to lower low to lower high. When this giant pullback came through and made those lower lows and lower highs, it sent us back down. Once again, we come up here, it goes sideways. We don't see any lower lows. We get a higher high. It's good. Comes down, keeps going, but boom, this big one right here. obviously a bearish engulfing, comes down 1, 2, 3, 4, 5 red in a row. Again, this bringing us back down. We don't have a higher high, a lower low. We're back down here once again. So we can see when you have more red, more large red towards the top, again, a trend is much more likely to break. Again, a super simple idea that you may not have ever thought about or internalized. But if you have a lot more red, more intense reds that lead to a lower low, that is again another great sign of a trend reversal on that swing. Swing up, lower low, lower high. With those reds coming in, you're most likely to see it come back down to value. Again, it's a very basic thing, but again, some folks don't think about these kinds of things. I want to mention it on the show at least once. Just to make sure, let's do one more and discuss retracement strength with this. Again, with the severity of how hard they come in, comes the retracement strength. Again, are there 2 or 3 big red ones in a row that really pull it down? Do we have a lower low, a lower high? These things are super important. And if it has more red and they're stronger or higher volume than the green ones, again, towards the top of these channel ups or towards the top of these horizontal channels, the closer to the top that you get, the more red and more intense, again, a trend reversal is more likely to happen for that short swing up than to down. One more example, let's check it out. Here's another great uptrending stock. Let's do it all together once again. We have a beautiful resistance right there that became a support. Love it. We have a great support area. You know, looks pretty, it's all right, looks pretty good. You probably put one more right there, that's fine. This resistance area became a support. This gap here became a support. This gap here was a part of this support area. You know, looks really good over here. A resistance, and again, one resistance up here. Looks really good. Again, I'll keep them on here just to have them on here. It's a lot of them, but that's quite all right. Our trend looks beautiful, just like this. Again, it's been breaking a little bit. You don't really want to cheat and put it here, but again, it's still very much alive. It's very much aggressive. A great looking trend line, looking beautiful. Once again, can we find a resistance trend line? Now, most times you want to go from the same swing high to swing low. This is a really long swing high, so it's giving us some options. What you can do is come from the top down. I don't usually do this, but again, it's probably just fine. We can see it's similar angle to this. Let's duplicate and see if it's a channel up. It very much is. Looks great. So what we're going to do is take this trend line here, draw it, activate it, move it up there. Put it where I think a good take profit would be, probably right about there. We'll extend right, extend left for now. Looks good. Make this our resistance trend line. So what we're going to look for, is it true? The closer the resistance trend line that we get, the more intense and hard the red candles get, or is it not true? Let's check. So we can see as we go up this action, not too intense, not too many reds, get closer, we hit it, what happens? Boom, it comes down. Once again, over here, we get close to it, boom, it hits, it comes down. It pulls down hard, comes up once again, and then boom, it comes down hard. One more time, resistance trend line, a bunch of red, it's more intense. Towards the top, it gaps down, it's more intense. So, with the fact that we know that towards the top of a resistance trend line, we're more likely to have more red candles, you can then make the assumption that you should watch volume. And when you get that first big red one, it's probably smart to get out. Again, it may make no sense at this point until you practice it. And for those of you who are more veteran, it may be an obvious thing that the closer the resistance you get, the more intense the red candles you can get because more selling pressure is coming in. Again, an obvious thing for some, but again, it needs to be mentioned. So there you guys have it. Those are some really good tips on planning some reversals. All this is mainly based off the fact that you should have proper technical analysis to begin with. If you have proper buy-in channels, you have proper supports and resistances, this should just be another reminder, some things to look out for. The main one that we talked about that comes first, higher highs and higher lows. If you have those across the board as you go up the price action, having higher highs and higher lows, you're good. No problems in coming your way. You should be just fine. But the minute you have a lower high, the next logical step has to be, do I watch and see a lower low? If that happens, that's your first sign of the macro change, the macro channel up, the macro channel, the wedge, whatever it is. The second we have a lower low and a lower high is our first signal of a possible overall trend reversal. The next thing that we discussed are resistance trend lines. Now we've drawn them before and discussed them before, but it's super critical to understand the closer to those resistance trend lines that you get, the clearer that they are, the better you are at drawing them, the more successful you will be at getting ready to spot trend reversals. You're not going to see them very often happen not near a support or resistance or a trend line. So if you draw the resistance trend lines well, setting yourself up to spot them happening sooner is much more logical and more likely to happen. So again, make sure your resistance trend lines are clear, duplicate that, move it up. If they don't match, start to draw and try and figure it out. It's the best way to plan your reversals. When you're trying to take profit, it's probably the first step of doing it correctly. Again, it's a obvious thing, but it needs to be mentioned. Thirdly, we've discussed this before, but once again, when a major support or a major resistance are broken, you are much more likely to see a trend reversal. Once the trend breaks, and again, once it breaks down through it, that's an obvious one, right? But once a support or resistance on a horizontal play, or even that staircasing up, once that breaks, it's more likely than not that the trend up, the trend down, the trend support, or trend resistance, one of those will have to be reset when those break. Make sure you watch for those. It's an obvious thing again, but when a support or resistance breaks, watch for a trend reversal. Fourth, on most of our bullish setups, channel ups, triangles, whatever they may be, wedging up, whatever it is, towards the top near the trend resistance line that you've drawn, if you see a large red volume candle, that again is a first sign of a swing going from up to down. So again, if you see a large red volume candle towards the top, beware. I think the swing is coming down towards value. The same thing is applied when it gets low, obviously. When we have a swing down coming, then we get towards the bottom of the trend for a buy-in spot, we see a large green candle. That's our first signal that the trend is coming back up, and we should be riding the swing high up. So again, volume does matter. We'll talk about volume profile like that a little bit more, but traditional volume does lend some great eyes into that. Lastly, we talked about size and strength of candles. Towards the top of resistance trend lines when you're getting up there, do you see more red? Is there a bearish kind of setup, a bearish engulfing, 3 red guys down, whatever it may be? Keep your eyes peeled. Again, because if you see those 3 things happening, we see a resistance trend line, it's coming back down, large volume, that again, that is a great sign of a trend reversal. And the same thing goes for buying in. You see 4 or 5 greens in a row, a big green guy, a big green engulfing one, that's another great sign of a reversal happening. Again, the reason this is so important is that this is based solely on risk management. If you can start to plan and see trend reversals happening before they really start to kick off, you can A, have better buy-in spots, and B, have better exit strategies. Now again, convergence isn't a reason to buy in. It's a great reason to play a stock, and we'll get into buying in soon. But again, if you cannot properly enter a stock and exit stock confidently, anything I talk about beyond this point will be worthless. This is a great tool. It lends a lot of great support. And again, study these things, talk about these kinds of things. It'll make you a better trader every single time. We have 2 more technical analysis lessons. We're going to talk about risk versus reward next and how we can properly plan our trades to make sure they're in our favor. And then, of course, we're going to end on our realistic goals. What kind of things should you be planning for the rest of the class? What kind of goals for technical analysis can you assume and take on? That's our next lessons we're going to be talking about. Stick with me. Let's talk about risk versus reward on the technical side. Let's get it.